Hi, everybody. We'll just go over the market on the ES and crude today and see what happens. So we see the daily and the hourly are in uptrends. So what does that mean? That means look for longs, and that's about it. So that's what you do. Just look for longs. So here the hourly rallied over here. Pullback one, pullback two, went into spring position right here. Okay, so went into a spring position. So I've explained multiple times that typically there are four scenarios for pullbacks. The first scenario is that it goes all the way to the origin of the rally, where the rally came from, and that's near your demand zone. So that's scenario one. Scenario two is it goes to a former resistance turn support, the area that it broke out of, and it pulls back to that area to test. So that's scenario two. Scenario three is that it pulls back to a POC level or a high volume level. And finally, scenario four is that it does a spring. So it may seem like a lot, like there are four scenarios, but just kind of anticipate them. And you already know, it's going to be one of those four scenarios. That's what happens mostly with pullbacks. So you can go look at any market that has a rally and observe the pullbacks. You'll see it either goes demand zone, test the breakout, POC, or a spring, and then rallies again. Otherwise, it's going to break the low and it'll be in a position where there's either a trend break to go down or it may be a shakeout. Anyway, so this situation was what? A spring right here. So that's SP, spring this low. Spring is just the ABC correction, all right? It breaks the low without much follow through. So that's what it did. When you have that red, the wave turns red on the pullback. It's in spring position, makes a lower low. As it made a lower low, what happened? Now you go to a 5-minute chart. Initially, it went here and there was a buying wave, right? So I knew there's something going on. But this buying wave didn't take out the high, and it didn't have much aggression. So I'm not willing to long the pullback here. I wait until I get another buying wave, and this buying wave has these green, and is very aggressive. Meaning this bar is the biggest bar in 65 green bars. This bar is the biggest bar in 67 green bars and 100 bars. 100 bars, okay? This did not have any of that. This buying wave didn't have any of that, so I knew to back off. Even though it's a big wave, and that's why it shows as a buying wave, because it's a big wave. The big wave is not taking out the prior high, and it's not showing aggression. But this buying wave showed a lot of aggression with the biggest in 100 bars. So I already know when you have that change of behavior bar validates the change of behavior wave, and the change of behavior bars right here, that validates the change of behavior wave because it's the biggest bar in 100 bars. I repeat, biggest bar in 100 bars. What else you gotta know? It took out the prior high, so all right, there we have a trend change right here. This down rally has been taken out because these bars, green, strong, big, aggressive bars took out this high. So that's it. It's a done deal. Now I just come back and get in on the pullback. So this pullback is a little bit challenging because they had deeper pullbacks here. So if you got in here, you got out, it touched your break even. But even if it touched your break even, you could re-enter long, right? So you just need to know that unless it breaks lows, the trend is intact. So basically made the low, made a high low, although it was a deep low. And then right here I knew that's gonna go. Why? Because this, first of all, there's too much effort in this wave. In this wave, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars. And all that effort, and they couldn't take out the low. The giveaway was this bar, which was the biggest bar in 20 bars, right at the low, testing this bar, reversing with a high that takes out the prior high. So it's going to go. It does that, right? It does that. And even if you have your stop here and you get taken, like, it's okay. You can still re-enter. Why? Because as long as this low is not taken, that it's in an uptrend. Okay, so longs all day in an uptrend. So it goes up here. You go from your change of behavior buying wave to a rally, pull back to test, deep test, and finally have this pop. Okay, so the thing is, after it pops like this, I want out because I'm not going to be dumb. I know that two things can happen when it's up here. Actually, three things. Yes, if the most likely thing is that if it starts showing red bars, it's going to come back all the way back down. And I don't want to endure the pullback and the agony of, waiting and all of that. So just take it here. All right, so that's what happened. And one quick way of doing this is as soon as the bar closes below the prior bar low, meaning if you're in and you're in a momentum move, all you have to do is get out on a close of a prior bar low. So for example, you have this green bar. This is a higher low, this higher low, right here, exit. Why? Because the close is lower than the prior low. So typically when the close of the bar is below the prior low, it's a red bar with a lower close than the prior low, and that's a bad, that typically leads to a pullback. If you close below the prior low, it's not a good sign. It may just be a correction to go higher, but in this case, all it did, it pulled back, did an upthrust, and totally took out the trend because it's the end of day, and basically the longs want to exit, right? Because it's too high up. Some of them, I guess, got in here with this big green bar, but it's end of day, so there's not enough liquidity to pop. Anyway, so what do we learn from this? The first thing is you have to look at your high time frame trend and see the position of it and anticipate the pullback areas after a rally. Do we have a rally? Yes, we have a rally. Where's the rally? There are two of them so far. One is here, the other is here. So this rally led to this pullback to test the breakout in this area. This rally, it didn't go all the way this low, but it did a spring, which I told you is like that's scenario number 3 or 4, where it does a spring, scenario number 4, where it does a spring. And when it does that spring, you just look at the lower time frame and see is there buying activity. If there is buying activity, you have to see the quality of the buying. If that buying is shit quality, meaning weak bars, I don't want it. If it's strong bars, I want it. Why? Because strong bars can mean one of two things. One is the buyers are absorbing all the supply, or the supply is not there. Either scenario leads to big bars, meaning the heavy volume comes in and absorbs all the supply overhead, or moderate volume comes in and the bar is big because there's no supply, leading to a bigger bar at higher levels. The supply is at higher levels, so it's an expansion in the bar. And that's what happened here. It broke the trend. Very important. That's what you need to see, because you're always trading with the trend. Always trade with the trend. I can't express how important that is, because if you don't, you're going to constantly be like a lot of the traders that the mistake they make is they go long. If it doesn't work, they go short. If it doesn't work, they go long. If it doesn't go to a short. This back and forth is really problematic, because it messes with your ability to see the market clearly and creates a lot of stress. So I want to go long. Why? Daily is an uptrend, hourly is an uptrend, get a pullback. That's it. And I'm only looking for longs. Long. And finally, it gave this move up here. It took a whole damn day, So I was pissed off about that, but because I thought it was going to just go in the morning, but it took the whole day, popped finally here, and then it dropped. So this was the move. Now, what am I looking for? I'm looking for a pullback, but I don't know where the hell it's going to pull back, because these levels might consolidate at 51.20. Otherwise, all the way down to 51.96 or 51.04, these two areas. So there are a couple of levels here, but I really have no clue, because the major buying is at 50.96 here, and the rally after that is 51.20. So maybe 51.20, otherwise lower at around 51.04. So in this area we'll see if there's any buying, otherwise it can set up a nasty pullback. Anyway, so that's all I have for this market. Let's move on to the next. So this market, unfortunately, was a spring failure. What happened was, we know that, okay, first daily is an uptrend, hourly is an uptrend, all right? There's no question about it, done. Uptrend means low, I'm looking for longs. That's it. It's simple as that. You're trading with a trend, rule number one, right? So here you have a rally. Here you had a spring. And again, the four scenarios are what? The market pulls back to either the low bar, right, around the low, around the pivot lows, around the origin of the rally, to former resistance becomes support, which I think is the situation here now. Here's the situation, because this is a former resistance. It's tapping it, and it might turn into support for a move higher. So I'm watching that. 3 goes to a POC level. 4, it does a spring. So this situation 4, right here, spring. As soon as we had the spring, you had a buying wave. This is good wave. This is good wave. Why? You see the green bars? This bar is the biggest in 100 bars. And as I explained to you in the just the prior study, a change of behavior wave or a sign of strength has a sign of strength or change of behavior bar. The big wave has a big bar. It's simple as that. This is the big bar. Why is it a big bar? It's the biggest bar in 100 bars. What else do you need to know? Right? So that told me the market's going up, and then it pulled back to test. Unfortunately, I couldn't get in here, and it rallied, right? So after it rallied, I'm looking for a pullback, but it came, I pulled back, gave a test, but for some reason, it failed. So the trend broke, the uptrend broke. Why? Because this low was taken out. If that low is taken out, goodbye. This low had a breakout, right? Breakdown right here, right? Took out this low. And what are you going to do? You had a breakdown here and a breakdown bar here. And that's all. That's all. If it breaks like that, the uptrend is broken. So if you didn't get in here to ride this one wave and try to get in on pullback, you might have gone in on pullback because there's some buying activity here, and then just get stopped out here where you just have to take the stop. And then after that, it turned into a downtrend. Why? Because it took out the low. So this is the support level. It's broken here. Why is it support level? It's the low of the rally. The low of the rally is always support. Support is the low of the rally. Why? Because there's massive demand coming from the low of the rally. That is how the rally is created. Because green, 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 green. 1, 2, 3, 4, 5 consecutive green bars here. So this low was taken. So that means it's done. The trend is done. And it just kept on going down. So this was a little surprising. This is surprising because bullish structure, bullish trend on both the hourly and the daily. But sometimes, this is what happens. So you just have to, your stop is make sure that you lose very little. And that's the only thing that's what the stops are there for situations like this. All right. So now it's set up. the downtrend, lower high, lower low, lower high, lower low, lower high, lower low, except here. Why is this important? Because at this level, you have a support block right there. So this is your support block right here. All right, and market is going to that support area. It's at that support area or very close to it with heavy volume. I think that's accumulation volume coming in. I'm not sure. You know, we'll see if these buyers can absorb this selling, right? These buyers here need to absorb this selling. So the selling's there. You can see 40, right? So selling is there. It's the biggest volume in 19 on this bar. Biggest volume in 19 bars on this bar. And this is the effort before the up move. So the buyers have to confront these sellers and see if they can absorb them to take it higher. And we'll see if they're accumulating and what happens. So, I mean, I don't know what's going to happen. I'm just waiting to react, you know, after these buyers win or these sellers take out this area. If they take it out, then you can initiate the a downtrend because they'll take out this low. Otherwise, the buyers will step in. So it really is at that last spot, which I explained is pullback scenario 1, which is the test of the demand zone. This is the demand zone right here. This is the demand zone from which you had all of this buying and also this breakout. So it's testing that. We'll see how it handles it. And that's it. So there's the support block demand that initiated the rally. Pull back to test that demand. See if the demand is still there. If it's there, it's an opportunity to go long. Otherwise, just back off. Right now, still in the downtrend on lower time frame, uptrend on higher time frame. Wait for lower time frame trend to align with the higher time frames for any trading opportunities. All right, I'm done. Thank you. Have a good day. Lesson, I'll go in a minute. All right, so we know that, you know, what's the most important thing? If you know by now, the most important thing is trend, right? The most important thing is trend. This is Wyckoff rule number 1, trade with the trend. Why? Because it's the most important thing. Why? Because it's directional edge. What does that mean? It means it tells you what side to take, long or short. So the first question, or one of the preliminary questions is, when you're a trader, is, do I go long or do I go short? Answer to that question comes from what is the trend. The trend is up, long. Trend is down, short. Next question is, where do I go long and where do I go short? The answer to that question is support and resistance. This is why trend and support and resistance are the foundation of basically directional trading, because one tells you what type of order, long or short, and the other tells you where to look for a trade, support and resistance. All right, that's common sense, but these are two problems. What side and where do I put on the trade? All right, now the second thing here is this is trend. So obviously this is an oversimplification. Why? Because most models are oversimplifications. And I want to ask you, what is this? So if you ask yourself, what is this? If you ask someone, they would say, oh, this is a trend. Okay, but what else? Higher highs, higher lows. Okay, what else? It's going up. Okay, what else? So, just keep on going through that line of thinking. And at a very fundamental, what this is a wave chart. It's a wave chart. This is so important. This is why wave chart is so important, because wave chart is the type of chart that frames the most important thing. Trend. This is a wave chart. Wave chart is a type of chart that frames the most important thing or displays the most important thing, which is trend. This is a wave chart meaning higher highs, higher lows. That's why you use it. And that's why Wyckoff, obviously he was looking at trends and he was looking at wave charts, because trends are visible on wave charts. If you don't have a wave chart, you're mentally putting highs and lows on candles, right? You're mentally putting highs and lows and connecting them in your mind. But the actual trend is framed in a wave chart. So this is why this type of chart is the chart for directional trading, because it frames the trend, it displays the trend. Otherwise, you're doing it subconsciously. So I just wanted to point that out. If you want to learn more about the wave chart, literally all you're doing is plotting highs and lows. Some folks do it based on the closes, especially if they're displaying volume at the swing highs and lows. But it can be done on closes, or it can be done on highs and lows. And it's very, very important type of chart. Most folks are only looking at wave chart and they're only looking at wave volume, but they're missing the bigger picture, and the bigger picture is the trend on the current time frame they're trading, as well as the higher time frame. And once you understand that, you'll understand levels, because you cannot, it's like this, the trend and the levels, trend and support and resistance, they go hand in hand. Why? Because support and resistance anchors the trend. Meaning you cannot have a trend without having a resistance point and a support point, a resistance point and a support point, a resistance point and a support point, and a resistance point and a support point. You see that the trend is a collection of support and resistance that are going higher, making higher highs and higher lows. So they're intertwined. See what I'm saying? Anyway, I don't want to go into this anymore, but this is a very important type of chart, and the more experience you get, the more you realize its importance. And then in the next part of this is, once you understand the trend and support and resistance, you understand that support and resistance are the edges of waves, and what type of wave. And the answer is your rally, also known as your impulse wave. So that's like the most important wave that needs to be identified in order to buy pullbacks. And that's what you're trying to do, right? All right, that's all, folks. Have a wonderful day. Bye.